In the previous video, I sometimes mentioned strong rejections of either higher or lower prices, and in this video I would like to cover those rejections more in depth, because those rejections are also a very important part of the price action analysis. The first part of the video will be a bit theoretical, and then we jump into the charts where I'll show you some practical examples. So let's get to it. And first I'll speak about rejections of lower prices. Rejection of lower prices means that the price is going downwards pretty strongly, pretty aggressively. Then it suddenly turns and goes upwards. There is aggressive rejection of lower prices. What this means in trading is that sellers are aggressively pushing the price downwards, and then the price hits some support and strong buyers start jumping very aggressively in the market, and they start pushing the price in the opposite direction. In this case, they start pushing the price aggressively upwards. So this is basically what sharp rejection of lower prices is. It is sellers aggressively pushing the price downwards and then buyers entering the market and pushing the price in the opposite direction. Very similar to that, only reversed, is the rejection of higher prices. What that means is that strong buyers are aggressively pushing the price upwards, then aggressive and strong sellers take over and the higher prices get rejected aggressively and the price goes downwards fast, like this. Alright, there needs to be the sharp rejection, and a rejection like this shows aggressivity of sellers. Alright, so when you see a rejection of higher prices, then it indicates aggressivity of strong sellers. Apart from the aggressivity of the sellers or buyers, the strong rejection can also tell us or indicate when trend is likely to be over or temporarily over. So when there is, for example, an uptrend and then there is aggressive rejection of higher prices, this is the aggressive rejection, then it is likely that the trend has ended or temporarily ended, and there is likely to be a rotation or sell-off. On the other hand, if there is a strong downtrend and then there is an aggressive rejection of lower prices, then it could mean that the downtrend is temporarily over and there will be a rotation, or there could be a complete reversal and an uptrend, alright? Change of trend. So always look for rejections like that if you are trading within a trend, alright? Another case where you will see the rejections, the sharp rejections, is in balanced market. It usually happens when the price is moving in sideways price action. There are strong rejections of lower prices and higher prices within the rotation, like this. Alright, so those are rejections of higher prices and those are rejections of lower prices. And when those rejections go against each other, which means that there are either rejections of higher prices and rejections of lower prices, then the market is usually balanced and it is moving sideways. Alright, which means that there's a temporary balance between buyers and sellers. A good strategy in the balanced market is to trade from those rejections back into the rotation, which means you are taking shorts from the rejections of higher prices and you are taking longs from the rejections of lower prices. Alright, so those are the rejections in a balanced market. Now, the rejections are very useful when you trade the support becoming a resistance setup or the resistance becoming support setup. When the price is aggressively rejecting, for example, the higher prices, like this, those are two strong and aggressive rejections of higher prices, alright? So when the price is rejecting higher prices like this, and then the price shoots past those rejections, past the line the price was rejecting, then the line, which previously worked as a resistance, changes into a support. So what you do is you just wait for the price to make it back to the support and you enter a long trade from there. Alright, so this is how you trade the resistance becoming support setup. A reversed case would be if the price was rejecting aggressively lower prices, some lower price, and then shooting past it, then the price level which got rejected in those two areas turns from support to resistance. So when the price makes it back to this level, you go short. It is the same as the previous case, only reversed. Alright, so this is another way how you can use the aggressive rejections of lower or higher prices. So here is the little summary of the formations and of the rejections and how you can use the rejections in your real trading. So this is how the rejection of lower prices looks like. This is strong buyers rejecting lower prices, which is a sign of aggressive buyers. This is how rejection of higher prices looks like. It marks aggressive sellers rejecting higher prices. This is how balanced market looks like. And when you see rejections of lower prices and higher prices, then the market is balanced and there is a temporary balance between buyers and sellers and the market is moving in sideways price action. Now this is how support, which becomes resistance, looks like. As you can see, this given price level was support, then the price went past it, it became a resistance. Alright, so support becomes a resistance. And the last one is the same one, only reversed. The price is rejecting aggressively some given price level. There are sharp rejections of this price level, and when the price shoots past this level, then this level becomes a support. Alright, so this is resistance, which becomes a support. So those are basically the 5 formations of the rejections, which I look for in my price action analysis. Alright, so that's for the theory, and let's now have a look at the charts. Let's have a look how to use those in real trading. So let's now have a look at the charts and how to implement the rejections in real trading into real charts. This is the Euro-Dollar 30-minute chart, so let's start with this one. As you can see, there was a strong selling activity right there, and afterwards, after the downtrend, you can see that there was a strong rejection of lower prices, which could indicate that the downtrend is temporarily over. Alright, rotation. The trend is temporarily over. Then you can see that there was another rejection of higher prices, and there was also rejection of lower prices in here. So this is basically the balanced sideways price action. And then, as you can see, the selling activity continued. And then, after this selling activity, there was a rejection of lower prices, aggressive rejection of lower prices, which indicates that the downtrend could be over and there could be a rotation or a change of trend. As you can see, there was a change of trend after the rejection. And then there was also a change of trend, but I don't really see any aggressive rejection in this area. So there was the downtrend, right here, the downtrend, and afterwards, aggressive rejection of lower prices in here. So this could mean either start of rotation or change of trend. Right now it looks like a bell